Hey traders, Parker here with an update to the sector rotation indicator. I updated the labels to now reflect performance based, so they're going to be show up red, green, and variations of red and green. For the most part, I have them performance based off of the 5 day performance, 5 day performance, 1 month performance, and 3 months performance. And this is just another visual representation of what's going on in the market. You can see everything is red for the 5 day performance. You have staples here that is green for its monthly performance and its 3 month performance. And my reason for doing that is basically when they talk about the sector rotation can take up to 3 to 6 months, or a rotation or the next move within the market can take up to 3 to 6 months to get to the next phase of the sector rotation in the market. And if you look down here in the labels, as you can see, you have your name, you have the actual price of the sector. You have the percent change, and right now I've set it for 5 days. You can go in there and change it if you want to the 1 day. You can go and change it, day change to just 1, and you'll get this number right here for the SPY. It's just this is 1 day change. So the SPY is down 3.70% for today, but its 5 day change is down 3.3 for the 5 day change. So, and the other thing in there I put back in those, the RS, the relative strength. And the relative strength number I got from a ratio between the 52-week high, 52-week low. And in between that, you get the ratios. Right now, healthcare is sitting at 58. And the market difference is this relative strength minus the S&P 500's relative strength. Right now, the S&P 500 relative strength is 10.53. That's how you get 47.55. So it's doing better, or was doing better, than the S&P 500. And the staples is the one that's doing the best. And that's why I showed you with the with the watch list columns. The other thing I changed with the regular sector rotation, I did have a line for the S&P 500, but I just decided to turn to histogram and put everything, overlay everything else on it, like kind of sort of how I did the 2.0 version. And that's my reason behind it, just to show you the in-depth view of what's going on in the market. And you look down here, the S&P 500 is about to cross below 10, which means it's making new all-time new lows for its 52-week. Making new 52-week lows, and the offensive sector is right behind it. And you can see this is the average, 21-day average of the S&P 500 is completely red because S&P 500 is below it. And the histogram will turn red or dark red if S&P 500 below 50. Everything in here is based on the ratio. All the different indicated sectors that I have programmed in here is based off the ratios of their 52-week high, 52-week low. And that's how I got them all to work together within 100 and 0. And right now we have a downtrend in energy. Energy was holding up, but energy stocks are taking a hit right now. So we go to XLE. Well, we didn't even have to go to XLE, but we could have just looked at the label. And right now the label is dark green. And just waiting for everything to repopulate. But there's the label for energy right now. And it's considered dark green because it's performance. And when we go over here, back to this watch list column, and we're on XLE, it's been down 1% on the 5 day, down 3.0 on the month, and it's still up 14.50 on the 3 month scale. So as you can see, some of this other stuff is still populated. But futures is still holding up. This pink line and this right here just represents the gap in price, and it's actually filled. But I still wait for it. If energy may still turn around. Well, I was listening to the pre-market prep show this morning. What's the guy named Chankin? I can't remember his first name, but he's the one who's invented the Chankin money flow indicator, and right now, that's what he was talking about. Energy still being strong for this time period because oil prices and stuff is still going up. So my bet right now, energy is still holding up. And if you look at it on this RS meter right now, it's saying it's at 82. So right now, does it have the highest 82? It's higher than Staples. And it has 71, so it's 71. It's doing market difference. I don't think there's another one out. Yeah, everything. Energy's outpacing everything. Energy's outpacing everything. That gives you some sort of idea where you want to be at, especially with this. And if I put the top one on there, it'll give you a better idea as well what I'm talking about, the RS number. It just takes a second for everything to repopulate. And you got that RS number at 82.51. And, excuse me, I have these set as Fibonacci ratios right now. But if you, once you get the indicator, you can go ahead and change all this stuff to whatever you want to change it to. And right now, this is 100. So this would be 100, the 52-week high. And this would be 90, so that's 10% away from there. And this is 78.6, which is the Fibonacci level. This would be 61.8, and this is 50% between the 52-week high, 52-week low. And this is 38.2, 28.6, and this would be 10 from the 52-week low, 10% away from the 52-week low. So you get the RS number here with this label, the implied volatility, that's used really for options. And the day high, day average, 52-week average, change from the previous close. I left that one alone. It's always just going to reflect whatever the same number this number has. And you have your 52-week mid, 52 day mid, 52-week low, day low, 52-week high, day high as well. And you can see how everything in this indicator right here, the section rotation model, and it's a visual representation of what's going on in the market. And energy is saying it's in a downtrend because it's below its actual 21-day average. As we can see, it's below its 21-day average. And the VIX is coming up. The defense is going down. So all those are considering downtrends because they're below the averages and they're headed down right now. So you got a downtrend offensive, downtrend defensive, downtrend energy, a divergent VIX, which means the VIX is going up while the S&P 500 is going down. Uptrend VIX, downtrend SPY. And that's everything right there. And that was, you can cut all this stuff off. You can cut all these labels and stuff off. Excuse me. You can cut all these labels, these bubbles off. And if you wanted to, you just wanted to look at the offensive sector. I have all that stuff cut off right now. And what I want to do is cut on the offensive sector. So this is the averages for the offensive sector. This is the actual offensive sector, which I'm about to cut on, and they're bubbles. So we'll cut those on. And you can see how all this stuff is basically in a downtrend. The only one that might be materials. And I'm going to go back to the SPY. Just because I like the because everything is based off of S&P 500, and that's why I'm just going back to the S&P 500, and you can see everything populating, and you can see all these down here. All that represents is the offensive sector. You got retail. Energy is always by itself, but utilities, healthcare, staples, real estate, and precious metals, or what I got labeled as gold, are a defensive sector. They're considered defensive. So you can see everything. All these lines right here, they're basically the offensive sector, and they're basically down. And you be wanting to compare them to the S&P 500. There you go. There you go. And like I said, that was materials, the only one that's kind of hanging up there, and that's what you're seeing right now. And you can say it's a 3-month. Let's go to materials. It's 3 month. It's up, but the rest of them are down. So there we go. XLB. So the 3 month is up, but the monthly change is down, and the 5-day change is down. But the 5-day change is not as significant. So its RS is at 47, and it's about 37 points above the S&P 500 right now. If you're looking at it from right here. And like I said, this is a visual representation of what's going on in the market, and these labels are giving you the other information that's going on in the market. And these are the sector rotation labels. So once you get the indicator, you'll get this entire package. You'll be able to choose between the sector, the performance-based labels, or you can get the RS labels, which had all the gray, the green, and the blue in it. So you can get those, or you can get the performance-based labels like I have here. But if you have any questions or anything, please leave them in the comment section. And if you haven't already, please like and subscribe. And I appreciate you guys for watching this video and just listen to what I have to say. I'm not a financial advisor or anything. This is not financial advice. This is just something I built out of necessity after getting beat in the markets. And they, the old saying I keep repeating is necessity is a handmaiden of invention. And I needed something to help me to understand sector rotation. So I built this based off the books I was reading, the YouTube videos that I started watching, and all the other different experts and everything. But I wanted to build something to help me out, to look professional, that could help other traders out as well, that you can get a real quick glance of what's going on in the market, what sectors are down, what sectors are up. And like I said, these are the performance-based sectors, labels. I'm trying to think of anything else, any other changes that I made to the sector rotation. But and that's pretty much it. That's the end of this video. I wish you all the best. Stay safe. Enjoy your weekend.